Hello, traders. Gary Wagner with the Gold Forecast here on Thursday, the 28th day of October, and this is the Daily Report. Gold is currently staging a very nice comeback, trading up about $17, currently trading at 142.07. $3.20 of that change is due to predominant buying. $13 to $14 due to a weakening dollar. Traders, subscribers, what a difference a day makes. As you know, I did have some concerns yesterday when we saw this large down day, this black candle following this other doji, when I was hoping what we would see was going to be an up and continuation day. We did not get that. In fact, the market traded down and came and tried to actually test these lows. I'm going to show you on an intraday chart how you can see this double bottom here forming. One day does make a difference in this market. There's no doubt about it. Currently, we have this large red candle, the sizable, beautiful up day. And as I said, we have the dollar under significant pressure. Traders, I've put up a 30-minute candlestick chart. It's compressed so tightly, however, that it's more like a line chart. But I think it eloquently illustrates a couple of levels of resistance. The one thing that I first notice is when we look at these series of tops here, right at around 1350 here and here, simply extending a line, I think we're going to find some resistance right in that area. The other thing that I think this very eloquently shows is this band of support, this bottom right in here. And I think that when the market did come down and test these one areas, this was that area of support that it was working off of. Traders, we are looking at a weekly candlestick chart of gold. And as you recall, or if you recall, I should say, from our Friday's report, what we talked about was the fact that when we see this engulfing bearish, and this is what we were looking at the end of last week, and we looked at other points in the marketplace where we saw them, we talked about the fact that in most of the occasions, most of the time, such as here, and this is back in February of 2010, or excuse me, 2009, and then right in here, and this is November, this is that record 1221 top, that each time we saw that, it was followed and we did get a retracement of sorts. I also talked about the fact that there were times, and this one time in particular, in which when we had that engulfing bearish on a weekly chart, we did not get follow through on the following week, and that gave us the ability to take it up another leg higher. In other words, we stalled here, it came down just a little bit, and then went and made that new contract high, of course, record high. And then, of course, here is that beautiful Three River Evening Star. Now, we did get the engulfing bearish. This is that retracement that we saw last week that we eloquently actually predicted right before the market sold off. Well, it's a little too early to tell because we have Friday's trading before this candle forms. But as it stands now, we absolutely, on a weekly chart, are not seeing confirmation of a continuation in the retracement. And I think that it is fair to say, at least for now, that that correction and the bottom that we called is in fact a valid call in the market. In terms of our strategy right now, absolutely maintain long positions, maintain our stops at 1310. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading. We will talk to you tomorrow for the weekend review. Bye-bye.
When I look out my window, many sights to see.